where foreign banks in India aren't really happy with the recent regulatory changes from the Reserve Bank of India regarding the subsidiarization of their operations as well as priority sector lending. Now, most of them complain that they're being handed out a pretty raw deal. ET Now's Anirudh Ghosh and Simran Gill report on what the grouse is all about.
Foreign banks are perturbed as recent regulatory changes from the Reserve Bank of India seem to have handed them a raw deal. The central bank wants foreign banks to operate as wholly owned subsidiaries in India, as opposed to the existing branch format, something that will require them to change their entire structure and also have tax implications. Also, the recent recommendations on priority sector lending requires foreign banks to meet the same 40% priority sector lending requirement as private and PSU banks. Bankers clearly aren't happy with the changes.
I think there are a few tweaks to the way the guidelines have been issued that would be required for us to be able to kind of follow that path. We're working very closely with the Reserve Bank and the government to hopefully achieve those.
We also submitted some of the concerns which most of the foreign banks may have in terms of building the priority sector portfolio in accordance with the new guidelines, and we are hopeful that some of our suggestions may be accepted.
Banks like Standard Chartered, Citi and HSBC have significant operations in India and may have no choice but to comply with the central bank's regulations, even if it means some amount of short-term costs. What remains to be seen, though, is how the smaller players react to these changes. Simran Gill and Anirudh Ghosh, ET Now, Mumbai.